Hello, everyone, and thank you for joining us for today's webinar, Spreading 101. And this is with our own Kevin Falkman, one of CQG's product specialists. I'm Betty Smith. I'm Vice President of Communications here at CQG, and it's my pleasure to be hosting today's webinar. So before we get started, as always, we'll do a little bit of quick housekeeping. If you have any technical problems or issues with the audio or anything else, please use the chat feature, which in the WebEx Conference Center is in the middle of the right-hand side of your screen. If you have questions at any point during Kevin's presentation and demo, please use the Q&A feature, which is on the lower right-hand corner. Once we go to the full screen view, you can access both the chat and the Q&A, and that's going to be in that top navigational toolbar that you'll see. So I want to say a little bit about our presenter today. Kevin Falkman has been with CQG for almost 3 years now as a product specialist. He advises institutional trading desks, prop trading groups, and individual traders on our flagship product, CQG Integrated Client, and his niche specialty is CQG Spreader. Kevin's moved from trading on the floor of the Chicago Board of Trade to being an expert in electronic trading. So with that, I'm going to pass the presentation off to Kevin.
Thank you very much, Betty. It's a pleasure to be joining you today, and I want to thank all the folks who took an interest in this webinar and who registered and who are going to join us today. So thank you guys very much. Let me just take control of the PowerPoint and move right along here. Let's talk about some of the advantages of the CQG Spreader and the CQG Integrated Client. I'd like to speak about the technology that we use, the CQG Spreader. The CQG Spreader's core, is really our co-located servers that are located globally at major exchanges. And some of the technology that we utilize within the CQG Spreader core helps to give you an optimal trading experience by utilizing our proprietary algorithms to work orders based on amount of volumes that are available at any given time in leaning leg markets or in monitored markets. So technology that we use essentially allows the person to trade spreads, but reduces the probability that they would get hung by monitoring volumes in these monitored markets. In addition, CQG Spreader's network infrastructure is a fully hosted solution. We manage all aspects of the trading technology so that your only focus needs to be on trading itself. And in addition to that, I've got an idea here what the connectivity would be like globally, including exchanges. We'll start from the top here, eSpeed and BrokerTech, moving around clockwise, the TOCOM, TSE, and Osaka exchanges, the SGX in Singapore, in Sydney, the ASX, SFE, and Eurex exchange, in Moscow, RTS, in the UK, NYSE Life, Euronext Paris, and Euronext Amsterdam, LME based in London, in Toronto, the TSX and the Montreal Exchange, and then here locally in Chicago, Globex, ICE, NYSE Life, the CFE, and GovX. So give you an understanding of the infrastructure and the global reach of our fully hosted solution. Now we manage all these aspects for you so that you can just focus on trading. In addition, we have the speed that would be necessary to trade globally utilizing our co-located server-side logic. In terms of this co-located server-side logic, as this illustration shows, Your spread logic sits server-side in very close proximity to the exchange. This allows for very, very rapid updates of monitored markets, allowing you to work orders very, very fast, very close to the exchange. The alternative is a desktop application with client-side logic. Desktop application with client-side logic has to traverse through the exchanges, back to the desktop application to make a decision based on the information that the exchanges are presenting, and then reacting to that information from the desktop. Very good illustration here of the difference between the CQG Spreader core, which takes your strategy and your working orders next to the exchange, co-located. Essentially, all of the heavy lifting is done server-side. We're going to show a demonstration today, specifically Spreading 101. We're going to be able to create and chart a spread strategy. We're going to, in this demonstration, analyze a spread strategy. And we're going to trade a spread strategy. Now, I've created a short demonstration of the CQG integrated client and the CQG integrated client screen we have in front of us now. So this is the CQG integrated client. We have several components here which I'd like to talk about as we move across the screen. From the uppermost left portion, we have a quote spreadsheet which I have built custom for my use. I have an order ticket in the center, and I have an order ticket on the right-hand side of my workspace. Down below, I have a outright chart. This is of the E-mini S&P. And I have a chart in the center here that is actually a chart of my synthetic strategy. Essentially, what we can do with the quote spreadsheet is put in several different asset classes. In this case, I've got equity index, looking at the E-mini S&P, including a couple strategies that I've included under that heading. Energy contracts, including the crude oil contract, Globex, crude strategy. I've done an arbitrage between the ICE WTI light sweet and the NYMEX crude, and the outrights for those legs as well. And another strategy that I've created looking at the dollar index against the crude oil. Under the currency heading, dollar index, we've got the Euro FX, the Australian dollar, the British pound, Canadian, and the Japanese yen. Just as an example, in terms of pulling in data from multiple exchanges around the globe, from TOCOM, got the gold contract and oil. And in Sydney, I've got the 3-year Australian bond. And from SGX, we're pulling in information on the Nikkei. Quite simple to show you how to pull information from my quote spreadsheet that I've customized, in this case, looking at the E-mini S&P. Just with one click, I'm able to pull that market data into a trading interface, in this case, the order ticket. I've linked the information in the quote spreadsheet to the trading interface and the chart, such that when I click on this euro currency, I can see that market come into focus on the trading interface, and I also get that market data in focus on a chart. I've linked all three of these. Let's talk about creating a spread. I like to create a spread utilizing the formula. Go to the top of CQG, hit the formula button. This will open up the Define User Formulas box. From there, we'll hit New. We'll give it a name. hit OK. From there, I'm going to type in the word spread. And we get a couple examples of spread functions. But all I really need to put in at this point is the two legs of my spread. In this case, I'm going to pull in the Euro December contract and the Euro March contract for a very simple calendar spread. Our systems go out and gather that market data. You get a value preview of where that spread is trading. Make a mental note that that's actually Q34. I've created a strategy called Q34. Just to illustrate the quote spreadsheet, I'm now able to pull Q34 into my quote spreadsheet, and you see the name of that strategy come in there. From that point, once I click on the strategy, I get that strategy in focus on the trading interface. And I have that information now populating the chart that I've built of the strategy down below. This is very helpful in terms of looking to see where that strategy's been trading over the last few hours or over the last few sessions. To continue, we'll customize this strategy by going into the Setup Trading Parameters. This is essentially where we will set the logic for our synthetic strategy in the CQG system, including such information as the color of the trading interface. We have server-side overfill management, which allows one to auto-hedge any overfills or avoid overfills. We have certain logic in terms of how the spread balancing legs will be priced, being able to ignore any partial fills in that discovery. Looking at the trade size below. In this case, I'm looking at the March and December contracts, trading those one-to-one, choosing to work the March leg, and I have the ability to hedge that order with a limit order with an offset. But in this case, I'm deciding to take that balancing order to the market. Under the messaging column, I have a volume multiplier field, which allows me to set a lean multiplier that's necessarily in the secondary or leaning market that will need at least 5 to work that order, 5 times my order size, that is. And the working threshold below, which is essentially an on-off switch, which I can tell the strategy not to work whatsoever unless there's a certain quantity in the market. In this case, I'm going to be a little bit more aggressive, and I'll leave the working threshold at 0. Minimum size increment allows us to tell the system to ignore any size in the monitored market unless it's X or greater. Decreases our messaging essentially by not reacting to as much in the monitored market. For folks who trade ratio spreads, like basis traders, we have proportional execution. We have queue holders, which allows one to stack the book subsequent of their top of book strategy order. And a full host of if incomplete or if you get hung logic that one could basically configure for their spread strategy. In this case, I'm taking that balancing order to the market, so there's no need for any if incomplete behavior on that spread. Just moving along now, taking a look at the quote spreadsheet. I have the test spread strategy that we have in there. I'm able to as well configure this quote spreadsheet to look at any positions, fill side on the buys, fill side on the sells, and if I'm working a strategy, any incomplete or hung orders in that spread strategy. I see the market data now in the order ticket. And as well, I see the market data based on my strategy in a 5-minute bar chart. We're able to actually add analytics to this chart of this synthetic strategy, this spread strategy. In this case, I'm choosing to place Bollinger Bands. It's essentially going to superimpose that analytics onto the spread chart. And I can see where that low value comes in on the Bollinger Bands, center value, which is like a moving average essentially, and then the upper level of the Bollinger Bands now on that chart. from here as well, I'm going to add another study. And in this case, I'm going to choose the order display. Now adding the additional study where order display will actually show any of my working orders and will also show graphically any of the filled orders throughout the trading session. It's a really nice visual to see on the chart of your strategy where you've gotten long or where you've gotten short, and at the same time, any of your working orders and the levels at which those orders are working at. Taking this the next step further, we're able to take this analytics, as long as they create a price on my chart, and now I'm going to superimpose those analytics onto the trading interface, which we see here. Now with that lower, that mid, and the upper Bollinger Band levels now superimposed on the trading interface. This now allows us to actually work orders based off of the analytics that are coming from the legs of this strategy. Now I'm working an order here at -10 based on that upper level of the Bollinger Bands, which we can see in the chart, and I can see my working order here at that -10 level as well. So I can kind of visually get a representation of where the market's been and where I'm working orders against that strategy. In addition to the lower level, or the upper level rather, I'm able to work orders off the lower level as well. In this case, I'm going to place a buy limit order at the lower level of the band. We see that order now being displayed in the chart. In addition to being able to work orders that now follow the analytics, so in essence, as the market data moves through the day, the trading session, those orders will move lockstep with where those analytics are coming in. But I'm also able to work orders perhaps offset from those levels. Sometimes you may want to be one price increment inside the Bollinger Band. You may be interested in working an order one price increment outside of the Bollinger Band. We have the ability to offset the orders from where the study comes in as well. And moving along here, taking a look at some other asset classes. As we see, I'm looking at the strategy DAX rollover that I've created. And again, just a simple click on that strategy from the quote spreadsheet. I get the strategy data on the order ticket. And as we see below in the chart, which we can see that strategy now graphically, we've got Bollinger Bands as well on that strategy, and we can see where those levels are coming in. In this case, I can actually give an example of the synthetic strategy that I've created. It's a calendar spread. We can see where that market data has been throughout the day. And I can see the exchange-based calendar spread now for that DAX contract that's traded on Eurex. You can see that the range has been between -75 and -90 throughout most of the trading session. This will give me an idea, perhaps, where I may want to bid and offer my strategy based upon where the exchange-based spread is trading. Here I'm working in order to sell one at -75. I see that working order information now populating the order ticket. I see the exchange-based product on the right side of the screen on the order ticket being bid at -85. And I see I get a fill here actually at -75, which is slightly better than where the exchange-based product is offered. So just an example of taking some additional risk in legging into this spread, that we can see how it could be advantageous essentially versus where the exchange-based calendar spread. In addition to just a regular day order, I'm showing an example of our iceberg functionality here. We're able to take a larger order size. In in this case a 3-lot, and I'm breaking it up into smaller clips. In this case, we'll work a buy order as well, and we can see from the confirm ticket that I'm only going to show the public book one at a time. So essentially the way that this iceberg functionality works, I'm choosing the iceberg strategy. It's going to show the public book one at a time, and after I'm completely filled on both legs, it will reload for another 1-by-1 spread. This allows me to trade bigger size, break it into smaller clips, and reduce the probability of being hung on a larger order size. Here an example of getting long at -85, getting the other side at -75. I can also use the other order ticket on the right-hand side here, perhaps to show a correlated market, or if I'm looking at perhaps another group of stocks under the equity indexes, I can bring in the E-mini S&P as we see here. Occasionally I may want to watch the major market. In this case, I was looking at the E-mini that day to get some guidance in terms of where I may want to bid an offer on these other highly correlated markets. Going back to the exchange-based spread, as you see, the order ticket is multi-tabbed. I can have multiple asset classes, multiple exchanges, and we can see that I've actually gotten long using the CQG Spreader, -85, on the DEIS March calendar spread in the DAX on the Eurex exchange. Moving along now, in addition to the order and position book and the chart, I can see that I'm getting fill information, fill on the buy side, fill on the sell side information. I can actually see the open position now in the December and March legs in the orders and positions view as well. Any buys I filled on, any sells I filled on, the P&L and open trade equity for any open positions. And we also give an estimate of the volume ratio and total amount of messages for the futures exchanges to help keep in line with their benchmark messaging ratios. Just moving along now to take a look at one of the energy contracts here, looking at the crude oil. And just to give an example of the functionality within the order ticket, quickly picking a price, choosing a level to buy at. In this case, I believe I'm buying through the market. I actually get a warning saying, hey, you're paying through the market. This is going to fill right away. We can see the position highlighted in the background. I'm getting long at 98.35. I have the ability to set stop orders as well. In this case, it's going to work a stop order below the market. And I believe I was filled instantly on that. Crude oil tends to move very, very quickly. And just as a representation here on the chart below, I can see where I've gotten long and short that market based on my fill information. Taking a look now back at the crude market, I get long again here, 98.27, I believe. Market trades a little higher. I'm attempting to work a stop order in the market along with a target order up above. We have full drag and drop functionality. I'm able to monitor that market and move the order accordingly. In this case, I move it down to 98.30 by clicking on the order, dragging and dropping it to my desired price. Here I decide to get long again, working a limit order below the market. Just an example, 98.18. I see that working order in the chart. And there's my fill at 98.18. Again, putting a target order up above the market at 98.25. You can see I'm long from 98.18. I see my working order as well now in the order ticket working order. And again, trying to set a stop order. I was lucky that time, market had traded up. Took my target order. Again, I get long this market, 98.19. I choose a price below the market. I can set a stop. And I set a target order above the market. We have the ability to, as well, link any working orders so that if you're working orders in multiple markets, or if you're working a stop order and a target order, we can actually link the target order to the stop order, which will allow you to have a protective stop in, a target order, and have them OCO'd. Essentially, fill in one of the orders would then cancel the other working order. In just a moment, I'm actually going to work a 3-lot order as well in this market. And here we see that crude oil market breakdown, my stop order represented in the chart, and the target order as well. I decide to get long again, this time working a 3-lot at 98, 97, 87. Just to give you an idea of the drag and drop functionality. You can drag this order to the best bidder offer or through the offer to get long. In this case, I'm long at 97.94. Putting a target order up above at 98 even. And an example of the stop order below now, selling 3 on a stop at 97.88. Linking these orders by clicking the original order, the order I want to link it to, and then back to the original order to OCO those orders now. One of the things about our OCO functionality is that even if I get a partial fill at 98 even, our system is smart enough to shave or essentially decrease the amount of working quantity on the stop order. In that case, I was fortunate. Market traded up, filled on my stop. You can see in the orders and positions book now, I'm flat, no positions. Fills on the buy side, fills on the sell side, and I've also corresponded that with the information that we see in the quote spreadsheet, which is customizable as well. Taking a look at another strategy I've built, the NYMEX crude oil and the ICE WTI light suite, which have a highly correlated movement. In this case, we're able to trade very similar product across multiple exchanges. In this case, working to buy that market 2 under, offer that market 2 over. Again, we see this information now populating in the chart that I've linked to the order ticket. I can bring the outright into the order ticket on the right, which I'm now bringing the crude oil market. We can see the market movement there. I've got the crude oil and the 15-minute bar chart just below there. And we can see where that market's been on a 15-minute bar basis. Now in this strategy, showing that I'm short 2 at the price of 2. The position is indicated as well at the top of the order ticket. As we see as well on the right-hand side order ticket, long 2 at 97.95 in the January crude oil contract. I'm able to drag and drop my strategy order as well up to a price of 0. Got filled there. Still short of 1 lot at the price of 2. Now showing to work a bid at the price of 0 to balance the spread out. We can see as well now on the chart below where the analytics are coming in, where my short fill is coming in at, where I've gotten long at the price of 0, and where my working order was as well. Moving along now, taking a look at the currencies. I bring in with just 1 click the euro. Just to show you the ease of use as well, I'm able to quickly jump to the TOCOM exchange with 1 click. We're able to bring in the TOCOM gold contract, which we can now see in the trading interface, the October 12 TOCOM Gold, and we see that information also populating the chart below. Shows my working order, again, in that chart. I'm able to tie the analytics into an outright, into a synthetic strategy that I built, and then make trading decisions based off these analytics. I may want to place a limit order like I've done here, or I may want to have CQG actually work those orders based on where that study comes in.
Kevin, you can probably see it, but it looks like we've lost the video.
And I'm just going to go back to the PowerPoint. That was just about the end of the video.
Fantastic. Thanks so much, Kevin, for that excellent overview of the spreader and its basic functionality. And I want to remind everyone that if you have any questions for Kevin, this would be a good time to submit them. Kevin, was there anything you wanted to say in wrap-up before we jump to the Q&A?
Yeah, certainly. The exciting thing about the CQG Spreader is the fact that we kind of give a full package. For somebody who's looking to get into new markets, it's very quick, it's very easy. If somebody's looking to spread across exchanges, it's a very quick and very easy start. We have the technology to allow you to be successful at trading these spreads. We have network infrastructure in place to give you a global reach at exchanges all around the world. We offer a fully hosted solution. Again, we manage all the aspects of the technology. And what this allows for the trader is the speed they desire to be competitive in these markets. These are co-located. These are server-side. This logic of this strategy that we're working sits server-side, co-located at these exchanges to provide the trader access to low-latency market data and trade routing.
Thanks, Kevin. I do have one question. It's from Sam. If I work a spread order of the S&P 500 versus the FTSE, where's the logic being worked, Chicago or London?
That's a brilliant question. Again, to exemplify how the technology works and in answering that question, that strategy logic actually sits at both locations. So your strategy that you build, that logic will sit both in London and in Chicago, and it will be monitoring both sides of that spread based on where your strategy needs to be executed. So in the short answer, the servers manage that logic, and that logic resides at both places. It's our proprietary technology that allows us to actually send that balancing order extremely fast based on what's happening in the primary market that you're showing an order in.
All right. Kevin, we have another question from Jason. He says, hi, Kevin. Which are your favorite calendar spreads?
I've got a fantastic story about walking into a firm at the Chicago Board of Trade, and a couple of old-timers were just about on their way down to the corn pit. So one of the calendar spreads that I absolutely love to trade is corn spread. Now, this fellow had a position on for quite some time, and I was bragging about the CQG Spreader in such that he needed to go down to the floor to buy 16s, let's say. Now, 16s were so well bid on the floor that he didn't really have any sense that he'd get filled that day. I told him that I could buy 16s right here on this laptop that I had brought in. So I queued up the CQG Spreader. He spent a little bit of time on the opening, and I actually showed him, and I'll do this live as well with live equity. I showed him that I could buy 16s utilizing the CQG Spreader, essentially taking some legging risk across the two legs, but was able to do something that somebody that's been in the business for a long time certainly didn't think I could do. So I really enjoy trading the grain spreads. A little anecdotal story there about my experience with somebody doubting me, and it was just a good laugh sort of that morning.
All right. We have three separate questions from Mike, And let's see. So the first one is, how real are the simulation fills?
That's a good question as well, Mike. One of the things that we do within the simulation environment is that we've got a couple different algorithms that run based on the exchange matching engine. So what we try to do is we try to mimic within SIM either the FIFO, first in, first out algorithm type, or whether you're trading exchange that's pro rata, then we'll try to mimic that type of order fill. One of the things that the simulation is really most powerful for is to allow you to actually see the live market data. It's not canned. Be able to build your strategy and be able to get a sense of the software without committing any equity into a live trading environment. Going from the simulation environment to the live environment is very simple. It's essentially getting the credentials from your FCM, and you can utilize all the homework that you've already put in and the effort that you've put in getting up and running on CQG when it comes time to go live.
All right. Mike also asks, and it just says charting of synthetic spreads. So I'm not sure if Mike wants to see that or wants you to comment on that.
Yeah, I can tell Mike that we can actually create a strategy. It could be even an extravagant strategy. And all we need is live data, essentially, to build that strategy and thus build the chart of that strategy as well. So we can build the chart based off of a 5-minute bar, a candlestick chart. We have several different chart types. And the analytics that can be put across those charts, we have a multitude of canned analytics. And we also have custom analytics that can be developed as well.
All right, and then the third part question was, do you offer NSE in India?
Not currently, but one of the biggest pushes that CQG is making currently is into the Asian region, including a data center in Shanghai most recently. We will continue to look into India, but we don't have anything currently established.
All right. Another question we have, although co-located, you would have thousands of customers at a single time. How does that affect, and I believe it's performance is the question.
Certainly. I'd like to give the general idea of cloud computing. One of the things that CQG does very, very well, we've been doing it for 30 years, is understanding market data, understanding how market data can impact trade systems and so on and so forth. So what we do is when you actually log in, your login credentials go out into a login server essentially. And from that point, what happens is we find the least utilized hardware to sign you on to. So we've got large data centers across these regions, whether it's in Chicago or London or Frankfurt. And when you actually log in to CQG, we sort of put you in the least used space. So the notion of the old way of doing things where you sort of are tied to a server and that's your server and every time you log in that would be your server, that's not the case here. Essentially when I log in this morning, I'm logging into the least utilized server at that time. Tomorrow morning when I log in, I could actually be hitting a completely different piece of hardware. So it's constantly dynamically load balanced such that the next user is going to basically utilize the least used piece of hardware at that time.
All right, Kevin, we've got another question from David. Can you combine Q formulas to create one tradable instrument?
David, that's a great question. I'm glad to say now, currently, we are able to create multiple Q formulas to build a strategy such that if I have Q1, I can do a Q1 versus a Q2, and that's newer functionality, and I'd be really excited to show you that if you're interested in doing a demo at some point in the near future.
All right, and a question from Richard. What is the actual time delay for an order to be transmitted from Chicago, Texas Light Sweet, to England, Brent Crude?
That's a very, very common question. I'd love to leave that for our network engineers. I want to be accurate with any type of metric that I speak about. And in general about metrics, it's kind of a question that we get a lot. Really, the determining factor is how busy something may be. That's really a big determining factor. I'd love to speak about that more. We can go on a lengthy conversation about that, but I'd love to address that individually and have metrics actually to back that up, which our network folks would provide. I don't have sort of a canned set of metrics based on that.
Okay. A question from John. It's my experience that not all brokers have all exchanges set up for spreader routing. Is there a list of brokerages that have a good offering of spreader routes set up?
Certainly. Our account managers have that information in terms of which FCMs have connectivity to which trading venues. We would definitely be interested in knowing more about your interests and tailoring a fit or suggesting a fit that would work out best for you.
All right. And from another John, if doing a ratio spread, for example, a 1-to-3 spread, would it be correct to assume that both legs are filled at once? That is, there are no potential fills.
In working a 1-by-3 spread, it depends on whether you're actually showing the 1 lot and actually working actively the 1 lot to hedge the 3 lot, or if you're actually working the 3 lot actively to hedge the 1 lot. Now, in the case where you're working a 1 lot to hedge a 3 lot against that, you would not be getting a partial fill most of the time because you're only working 1 to then hedge the 3, and that 3 need to be available, and we can set parameters within our setup parameters to help assure that. Now, conversely, if you're working a 3 lot to hedge a 1 lot, we offer a proportional execution in the setup parameter, which would allow one to define whether you want to send in the balancing order after the first is filled, after 2 of 3 are filled, or you could wait till the entire 3 are filled to send in the balancing 1 lot. This is a great feature for the basis traders that are using CQG in a standard treasury basis. We're looking at 1 million cash versus 10 futures contracts to be 1 million spread notional. Many of these traders who actually work the futures leg first are happy with, after 7 or 8 of 10 being filled, sending in that balancing order to the cash venue and then working the balance of 3 at that point in the contracts. So we offer proportional execution in the case that you're working the 3 lot to hedge the 1 lot.
Excellent. Question from Nelson. I'm interested in API access to and usage of the CQG spreading tools.
That's fantastic. The CQG API and Spreader are open within the API. We have from our website a link actually to the CQG API, which will show samples of code based on different programming languages. I believe everything from RTD to Visual Basic to C and C#.NET. So there are examples out there to get started right away. Internally, we have API support for the folks that utilize our API. And in addition, we've got a wonderful host of third-party API developers that are familiar with the CQG API and that are teamed up to write to the CQG API as well. Those folks are listed on the CQG website.
All right. And Kevin, we're going to take just one last question and then wrap up. From Jason, what are the advantages of the CQG Spreader over TT's Xtrader Pro?
First and foremost is TT's Xtrader Pro would be client side. So a lot of the heavy lifting is done under your desk. CQG Spreader, collocated, server side, which allows both faster data acquisition for your strategy and faster decision making on your balancing orders due to the fact that it's collocated and server side. Essentially, as I mentioned before to another question, that the logic for the synthetic strategy, whether it's a Globex spread, or whether you're looking at Globex versus Life, your strategy actually sits at both venues co-located. So your strategy actually sits very close to those exchanges. That's our advantage. In addition to that, to that end, the benefit to the trader is a more optimal trading experience with a higher fill ratio and a lower mishedge ratio.
All right, thanks again, Kevin. And I just want to let all of you know that if we didn't get to your question, I know that Kevin would be more than happy to follow up with you. And I just wanted to mention that this webinar, as all of our webinars, is a recorded one and will be available within a few days on news.cqg.com. I'd like to extend a special thanks to Ami Bergeson. She's our marketing event specialist, and she does everything behind the scenes to make our webinar series so successful. So a very special thanks to her. And Kevin, I want to thank you once again, and I want to thank everyone so much for participating and wish you all a wonderful holiday season.
Thank you, Betty.